Carl Icahn wants Apple to buy back even more shares, writing to CEO Tim Cook that they should be spending down more of that $133 billion cash pile. Now, Apple did respond, saying they will take into account his input and input of all shareholders when they do their annual review of their buyback program. Alex Gauna follows the company at JMP Securities and joins us with his take. So, Alex, thanks for joining us. Apple stock, by the way, hasn't done much on this. You call his note nonsensical and a sideshow.
Yeah, it is a bit flamboyant, and I don't think there's any rational expectation at this juncture for Apple to grow at the kind of rates that are outlined in this open letter. I really don't think Icahn has done any favors for Apple shareholders today. It creates, like I said, a sideshow that's just distracting. Apple, in its usual fashion, was very gracious in acknowledging the note, and saying that it'll take it under consideration. However, JMP Securities thinks Apple should be making its own decisions on how to deploy its cash, and its use for M&A activities could easily serve just as shareholder friendly as just a tender offer.
All right, so Icahn's obviously, all about shareholder return. He says the shares should be about double where they are now, around over $200 a share, $203 a share. Your target, by the way, is $135. Can you at least get into his head of how he rationalizes that kind of move?
Well, we would agree that Apple is undervalued at this juncture, obviously, and it does trade at what JMP Securities believe is an unwarranted discount to the S&P 500. But the kind of multiple that Icahn promotes in his letter, off of an order of magnitude better growth to GDP growth, just seems, with what's in the mix for Apple at this juncture, premature. He's getting a little bit out over his skis here. So yes, we think that Apple can outgrow the economy by 2, 3, best case 4 times, but then not 10 times right now, at least not with what's in the business mix. We like what's going on with the iPhone 6 and 6 Plus, but there are a lot of questions in terms of how these higher price points will be perceived in China, which is a key market for growth in a very economically sensitive area. Consumers don't have that kind of discretionary buying power, and we've got an area where the subsidies are coming down. So yes, we think Apple will perform well. JMP Securities thinks it's a nice flight to quality in these uncertain macroeconomic times, but not to the tune of a 200 plus price target at this juncture.